If you are a Bitcoin holder, you've been waiting patiently for this time to come.
It is all-time high week for Bitcoin. We crossed the previous all-time high of $63,500, setting a new all-time high of $67,100, taking a little bit of a tumble back down to $63,200, but still broke the all-time highs.
That's big, man. That's big. So the last previous all-time high, if I recall correctly, was sometime in April.
April 13th, 191 days ago.
So Bitcoin holders, like through this whole bull run, they've had to be very patient because they've watched all of these other assets pump since April. In particular, like we had this alt layer 1 summer. We had sort of a DeFi 2.0 kind of resurgence as well. And Bitcoin holders, if you are a Bitcoin holder, you've been waiting patiently for this time to come. The big news was going to be the ETF, right? And here it is. It happened this week, and that's why we're seeing the Bitcoin pump. Does that explain all of this, David?
I think that a broader question that I want to ask is, like, we went through an all-time high where we are now 191 days ago, 27 weeks ago. Then we went through like this period where Bitcoin just got slammered with FUD after FUD after
slammered,
FUD.
Huh?
China FUD, energy FUD, ESG FUD, like regulation FUD. And it took a beating. It went all the way, like how low did it get? Like 29,000, 7,000 or something before
something
returning
like
back to all-time highs.
Yeah.
And so, like, pretty crazy, right? And like, what is it? 27 weeks, half of a year. Like, there's always the conversation about Bitcoin goes in cycles. Like, was that a mini cycle? Was that a full cycle? Does it even matter as a cycle to talk about? Did we just go through like a full like seasonality cycle? I don't really know. Important story is we are back at all-time highs.
Yeah, the other, I guess, what that means as well is Bitcoin is rising up the ranks in terms of global currency. So it just passed the Swiss franc in terms of value, total value. There's Bitcoin, total outstanding supply, is more valuable than total outstanding Swiss francs. So it's the 13th largest world currency by market cap at this point in time. Unbelievable, right? What are we, 12 years, 13 years into this experiment?
At the same time, that makes it feel so low. I feel like,
does it?
That's it? Like Bitcoin's only beyond like the only number 13?
Friends, we are early. We're still early, right? It's going to be moving up these charts. Now let's get to the main event news items. David, let's start here, man. Bitcoin ETF, this is history. It's been 8 years in the making, all right? The Winklevoss twins, all the way back in 2013, they started this. They first applied for a Bitcoin ETF in 2013, hoping that the market was ready to get some retail exposure to ETFs. Didn't happen. Year after year after year, didn't happen.
8 years later,
it finally happened. Okay, so walk us through this, David. What's going on with this new Bitcoin ETF? What is it?
Yeah, the ProShares BITO futures-based Bitcoin ETF using the CME for the price reference rate. And so congratulations, we finally got the Bitcoin ETF. Yay.
How happy are you about this?
There's a big asterisk. There's a big difference between a futures-based ETF and a spot-based ETF. And while we are happy that we have a Bitcoin ETF, the game is not up. It's just a start because...
Okay, what's the difference?
So the Bitcoin futures offered by the CME, they have monthly contracts that end at the end of every single month, the last day of the month or the last trading day of the month. I think that's how it works. And so there's one for October that'll be up in like 10-ish days. There's one for, what's the month that comes after October? November. December, January, yeah. For the next 6 months. It's a rolling 6 months. And then there's also the next December and then also the December after that. So you can pick like which date do you want to make your bet about the future price of Bitcoin.
Sounds good.
Right, and there was recently a report that was submitted to the SEC saying that the onshore CME futures markets are actually driving the price discovery of Bitcoin over the spot markets, which I'm a little bit confused about, but I'll take it on faith because people who write that reports know way more than me. The problem with this as a ETF model is that the way that the ETF works is that it tracks the price of the next coming futures exchange. So like if it was like November 2nd, right? The ETF would be tracking the futures price of the next month. and it would be rolling into every single, as the futures contracts settle, because it settles once a month, every month, it rolls into the next futures month. And so there's these things called contango, where there's actually a discrepancy between the Bitcoin futures price of month 1 to month 2. So like, say for example, the Bitcoin futures of month 1 is clocking in at $60,000. And then the next month, futures traders have predicted that it's going to be $62,000. The ETF will sell all of the $60,000 valuations of Bitcoin into $62,000 valuations of Bitcoin, and they will actually lose shares along the way. Of course, this can actually happen in reverse. So in theory, it cancels out over time. But really what this does is this allows a bunch of middlemen and traders and who want to take advantage of this arbitrage opportunity to just kind of milk out just the leakage of value out of this ETF, right? So like, do you know how to trade around terms like contango? Like, is that something that you know how to do? Because if not, other people do, and other people are taking advantage of this.
But you basically, all you have to do is you just like, the value of an ETF is that it's in a brokerage, right? So it's in somebody's Schwab account, their Fidelity account. They don't have to open up Coinbase. You just buy it with all their other stocks. They buy the ETF. But what you're saying is because it's a futures ETF and not a spot ETF, it's less capital efficient for them to do so, and it's more expensive for them to do so versus a spot ETF, right? The best thing you can do, of course, is get over the hump, go open an account at Gemini or Coinbase and just buy spot market and let like them custody it and then graduate into, going bankless. That's the best thing you can do. But if you're locked into a retirement account, an ETF is the second best. The problem is this ETF is a futures-based ETF. It's not a spot-based ETF. And so it's more expensive for you. You're actually losing money versus buying Bitcoin in a spot market on something like Coinbase. Is that right?
Yeah, that's exactly right. So if you are interested in just buying and holding BTC Bitcoin on your traditional brokerage, this is actually just not, you're going to lose money over time than if you had just bought actual Bitcoin. And so that actually just puts people that actually compliantly can't go actually buy Bitcoin at a disadvantage, because they have to pay all these fees, all these traders, their arbitrage opportunities, where they could have just done a spot-driven market. And the very important difference about a spot-driven market is that when people buy a spot-driven market ETF, that ETF goes out and buys Bitcoin and puts it on the balance sheet, right? There's actually Bitcoin there. And so actual ETF demand is actual Bitcoin demand. And so this whole futures-based ETF, if it has a ton of demand, it might not actually translate to actual Bitcoin demand, or at least it will, but it won't be immediate.
In a roundabout way.
In a very roundabout way. And really that roundaboutness puts money into the hands of intermediaries and scalpers. And like, when it comes to the SEC, who approved this, by the way, what is their job? Their job is to protect investors. And so they are just shoveling investors into the place that they just get scalped. Like, what the hell, dude?
It's not the best ETF. Absolutely, right? I mean, the thing that they could have done is just approved a spot Bitcoin ETF. I guess the argument is that this is a step in that direction. And this is a more gated, regulator-friendly type approval because they know all of the intermediaries, all of the incumbents that are doing this. So I guess it's a big deal that they did approve it, right? That is a step in and of itself, that the government came and said, okay, fine, you can have your Bitcoin ETF after 8 years of retail asking for it. The question is, how long will it take them to get to a spot ETF, which is much more? Are we going to have to wait another 8 years? Right. God, I hope not.
Are they going to use this as like a defense? Like, we already gave you your ETF. Why do you need another one?
Also, I really want an ETH ETF. I mean, if we have Bitcoin ETF, then where's our ETH ETF? That should be coming down the pike too. So it's kind of like, it's good news, but it's also a little bit like, come on, we could do better, can't we? I hope this is just the first step. One thing that SEC tweeted out shortly before approving this is the week before, I guess, is a reminder: before investing in a fund that holds Bitcoin futures contracts, make sure you carefully weigh the potential risks and benefits.
This is the tweet that tipped everyone off. It's like, oh my gosh, there's an ETF coming. Yay.
I just think that there are some hidden risks and hidden costs that this type of structure doesn't actually tell you about. And it would be nice if those were acknowledged as well in this kind of a warning.
I think in summary, like we can zoom out and say, oh, the ETF that got approved is the one that is exactly what the incumbents and the current institutions would want the most and benefits them the most. Shocker. Weird.
But like this makes sense because regulators know the incumbents, they know how to regulate them, they know how to, put the stranglehold on them if they need to. And all of these new entrants are outside of their control, right? So they feel much less comfortable. So who are they going to let do it? They're going to let kind of their friends, the existing organizations whom they already regulate, do this. But we want spot. We want spot ETF.
We want spot. Grayscale wants spot too, right? So Grayscale has made a big ETF push, filing to turn their GBTC fund into a BTC, and the ticker name filed for ticker name BTC ETF. And so they are taking this opportunity they took opportunity by the horns, and they are now making a very political move, saying like, "Hey, give us a spot market." So more power to Grayscale.
Well, it's interesting because it puts regulators in this position where they're kind of king-making, right? It's like, we're going to approve these ETFs, but not these ETFs, right? And so what's the set of criteria by which they'll approve someone's ETF? And I think that's where Grayscale is like, hey, people are buying our trust anyway. We have massive amounts of Bitcoin inside of this thing. Why not just make this an ETF? Let's make it official.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.